All right. Hey, everyone. Mark here. Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. I don't expect a whole lot of people to be here today. It's the fourth week of August, which is usually the slowest week of the year. That's why I'm going to do the entire stream like this. Okay, I'm joking. I'm not going to do that. All right. So anyway, welcome. If you're new here, let me explain to you how this works. So first, I'm going to go over the economic calendar. All right. It's something that you should get in the habit of doing each week so that you're aware of what type of economic events could change markets in an unexpected way. Second, we're going to go over today's chart analysis, which I titled the part of the chart that you can't see, basically. What's this? Oh, okay. Hold on. I just got kicked off a Rumble. All right. Whatever. No one watches me on there anyway. Okay. So the title is the part of the chart that you can't see. So we're going to go over that. It's an important concept that you're not going to hear in too many places. So we're going to cover that. Then we're going to go over the Trade Scanner Pro and see if we can find any trades in this very tough environment. Okay, so with all that, let's get started. Let me just pull up my special slide over here. Just give me a moment. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, cool. Let me welcome all my regulars. Right, I get Sam. Hey, Sam, thank you for being the first to like the video. By the way, if others want to press the like button and the subscribe button, that also helps. I might as well get that out of the way now as you watch the content. Please do me that favor. Lad, good to see you. Steen, of course. Steen is the guy that made the Trade Scanner bot and the Trade Scanner Pro tool that we use on TradingView possible. So a lot of thanks to him, and we'll talk more about that stuff here in a moment. Merjan, good to see you. Okay, and Peter, good to see you. Savi from Brooklyn, how you doing, Savi? All right, I know you don't talk like that, but just, people in Brooklyn used to talk like that. Anyway, all right, so welcome, guys. Let's get into the first portion here. Now, before I talk about the economic calendar, let me just say a couple of things. First, make sure to check the links in the description. If you're interested in the Trade Scanner Pro, which is the tool that we use here on these streams, all right, it's a confirmation tool. There's a link in the description, and you can try it for 14 days for absolutely free. All right. After day 14, though, you will be billed. Anyway, we'll talk more about that soon. Second, if you want to join the Discord community, there's a link for that as well. There's a free chat in there where there's a lot of good information. Alex from Romania, he moderates that, and he does a pretty good job answering questions. Steen is also present there, and he answers a lot of questions as well. So feel free to join that and participate. Also, if you want to get a free signal from the Trade Scanner bot, it used to be called Trade of the Week. In fact, I haven't changed it in the links in the description, but we're actually changing that thanks to Steen's hard work. We're updating that and Sam's suggestion. We're updating that to Trade of the Day. So you can get a free signal from the bot every single day if you sign up there. Now, here's the thing. If you try using that link right now, it's not going to work because I have to change something. Because the list is full, but I have to change something. And after today, you should be able to sign up. So anyway, I just thought I'd mention that. Also, if you're interested in exchanges like Bybit or MEXC, you can click on an affiliate link that we have here in the description. That is Steen's affiliate link. So if you open an account, you fund an account, and you place trades, Steen gets a small cut. Now, that's a nice way to help him out so that he can further support the community and provide all this great technology that we get to utilize each day. He makes for a great experience. So please help him out if you're interested in opening an account. That's primarily for non-US residents. If you're interested in TradingView, there's a link for that as well. You don't need TradingView to use the Trade Scanner Pro, but there are a lot of perks that come along with being a premium subscriber. Steen also gets a cut of that, so please consider that. If you're not interested in any of those products, you'll notice there's a Polygon wallet and an Ethereum wallet. You can tip Steen, which, again, it helps him support the community. It goes a long way into helping him with his efforts. So please consider that. All right, next, let's move along. So economic calendar. Again, like I was talking about earlier, this is the fourth week of August. As you guys know, I've been talking about this for quite some time. Weeks 3 and 4 of August are the slowest weeks. Hey, Sean, good to see you. Nugs, good to see you. the slowest weeks of the year in terms of average volume. This is very important, especially as a day trader. It means that markets are going to be a little slower, more erratic. You may have slow grinds. You may have just like a sharp move and then nothing. You're going to have a lot of fake outs. Please, if you're going to take time off, this is the week. You really should not be aggressive this week. Don't take chances. Don't be taking big positions. Focus on the levels. Be very selective. And if you're uncomfortable, all that, just paper trade. Okay, nothing wrong with paper trade. Hey, Milad, how are you? Good to see you. My guy, he's my guy in Manhattan, and Savi's my guy in Brooklyn. All right, my two New Yorkers. I only have two New Yorkers watching me, and I'm supposed to be like a New Yorker. Anyway, but they're too busy watching Kramer. So it's a very slow week. Please take that into consideration. The volume will tend to get back to normal when we get back into like October. So please understand, it's not like a light switch where, okay, next week it'll be back to normal. No, it takes time to build back up, because when volume declines, which begins in May, it doesn't just go in a straight line. It fluctuates and slowly gets less and less. Now, what's actually happening there? There's less participation from the herd. People, what do they do in August? They go away, right? So there's less people involved. I'm willing to bet, though, if we were to do some research to look at like the average volume on something like the S&P going back 10 years, I'm willing to bet that this time, going back 10 years, the volume has generally increased, but that's probably because algos dominate this game, and algos don't go away, right? So it's the people that go away. And as you can see, people have an important effect on the market. In fact, I saw somewhere a while back that algos account for 70% of the volume of that basically in the US markets, which means 30% is transacted by people. That's really not good for us, because profits come from people, not from algos. It's very hard to make money from a robot that has no irrational decision making. Mistakes from people are where profits come from, right? So let me just kind of give you this analogy real quick, and then we'll get into the economic calendar. Just something to think about. So imagine poker. We're going to use poker here, poker player. Even if you don't know anything about poker, this will make sense. So where do you think, as a poker player, let's say you want to be a professional poker player, and you have to decide, okay, so where am I going to make money? Where do you think your chances of making money are greater? At a tight poker table full of other professionals who know each other. It's the same guys every day or every week. They all know each other's tricks, and they're all tight conservative players. Do you think you're going to make money there, or do you think your chances of making money are better in a place where there are lots of drunken tourists that are just showing up to have fun? They're not looking to be professional. They're just drunk. They put the sunglasses on. They want to take pictures at the table because they think they're cool, and they're just there to gamble and have fun, right? That's where you're going to make your money. So my point is, you want to be where the drunken tourist is. And right now, the drunken tourist is not here in the markets. They're away somewhere, okay? And when they come back, that's when there's more opportunity. So please keep that in mind. Money comes from drunken tourists when you're playing as a professional poker player. Here in the markets, money comes from novices, ignorant people, people that follow the herd, people that can't think for themselves. There's lots of those people, and they're attracted by fake gurus and all that stuff. I beg you, please do not be one of these people, because you're just profit potential for someone else, right? That's why you're listening to me. Most of you here are not. Because you're listening to me and I've brought these ideas to you, I think that you're in a better position to think for yourselves, right? Anyway, that's the whole point of why I do these streams. So, all right, so let's move along here and let's talk about the economic calendar. They're in Belgium drinking beers. They could be there. I'm sure there are plenty of them there, because we know that Belgium is the land of beer. Steen educated me on that because I had no idea. You know, I'm in the US, so I'm ignorant to like things that go on in the world. Anyway, all right, so let's talk about the economic calendar, shall we? First thing, again, it's week 4, it's quiet. there are only two items that I noticed that were worth even mentioning. And that is on what, Thursday, we have GDP annualized for the US. That's usually not a major mover. So again, it's mentioned in the calendar, but I wouldn't even worry too much about that. And then Friday, we have core price consumption expenditures, something like core PCE, which and there's year over year and there's month over month. Those both come out for the US on Friday. That could be somewhat of a mover if there's any surprises. That's important mostly for intraday. Otherwise, it's not a big deal. I saw some other numbers, like I saw CPI for Germany and I saw CPI for the EU. I believe that's Wednesday and Thursday, something like that. But those numbers usually don't move markets in a global way. So I wouldn't worry about those either. So I think it's safe to say it's a very quiet week. Now, the week before, on Thursday and Friday, we had the Jackson Hole Symposium, right, where Powell spoke and you saw he caused some action in the markets. Let me ask you, why do you think the central bankers choose week three in August to have their little banking get together? Why do you think they choose that week? Because it's a busy week? Because they have all kinds of stuff to do? No, because it's the quietest week of the year. Right? Please keep that in mind. That's why Jackson Hole is always like week 3 or week 4, somewhere around there in August. All right, enough of that rant. So that's the economic calendar, pretty straightforward. Let's move on to the next thing here. The next topic here is the topic of today's stream, right? And I titled it, Part of the Chart You Can't See. Now, what do I mean by that? By the way, I hope you read my TradingView article. Let's make this chart bigger now, because I touch on some of these things in my TradingView article. It got selected, by the way, as one of their picks, which was nice of them. They've been selecting a number of those. So I guess I wrote some things that were insightful enough for them to select it. Now, first, let's just talk about this Bitcoin situation. So keep in mind, we just said that it's the slowest week of the year, and it's going to take at least a month and a half before we start to see regular volume, which means price ranges will probably return back to normal. Things will make a little more sense in terms of price action at that time. But at this time, we have to have our expectations very low. So before I talk about the invisible part of the chart, I just want to mention how I came up with this scenario. This right here, this little pullback here that I drew, this illustration on my chart, that's the scenario, right, that I anticipate for the week. Now, so far, the market, Bitcoin, is agreeing with me. It doesn't always agree with me. But why have I chosen this? In fact, yesterday, when I was writing the article, we had 2 green inside bars. At the time, this red candle was an inside candle. It was still an inside candle. And it looked like it was going to break a little higher. Now, I mentioned that, but I said, if it breaks lower, that would be our confirmation. What am I confirming? The level. So when you're in an environment like this is why context and having a good grasp of your bigger picture is so important. We're not in a trend right now in the bigger picture. We are in a consolidation. So that right there shapes our decision-making tree as we go forward. If we're in a consolidation, that automatically should mean to us that resistances and supports are likely to hold. Both sides are likely to hold because we're not going anywhere. That's important. But you say, well, what support and resistances? Well, the bigger picture ones, because we can find support and resistance on all time frames. But we're interested, before we come up with any trade ideas, we want to be aware of the bigger picture ones and answer the question, are we at one? And when we ask that question, are we at a bigger picture resistance? Yes, we are. 64K, as you could see here, has been a resistance. Now, where do I come up with that number? Look at the history. Look at this reaction right here. Look at this reaction over here. Look at this little pin bar over here. It's not that little, but look at that. Look at this reaction over here. Look at this reaction over here, this little set of reactions, okay? Look at this reaction right here. Look at this one. Notice there's a lot of touches of that level. There's a lot of reactions. That's history. But we can use that to our advantage when we project into the future. Now, that's where 64K comes from, and it's been acted upon numerous times, which tells me something about the order flow in this location. That is the key. So as you notice, I'm not talking about news. I'm not talking about the RSI. I'm not talking about all this other moving average nonsense. I have a level in mind, and the level has historical evidence of some type of activity there. Okay, there's a reaction of some kind. It doesn't always look like over here it broke. Okay, but this historical action still means something in the future. It points us to there's something happening here. We don't know exactly what, and we don't know why, but we don't need to know those things. We just need to know that there's something happening there. It's an inflection point. So when we test it again, like here, then, and we're not in a trend, because we're not on the bigger picture, we're not, there's a greater likelihood that we hold. How is this information important? For one, you should not be going long as a swing trader, especially at such a level. If there's someone that you follow, oh, Bitcoin, look at this move, it's going to 100K by tomorrow, and you got long and you find yourself kind of like, what's going on here? You only have yourself to blame. This is a low probability location for longs. If you got caught because of this big green candle, that means you're operating on misinformation. And misinformation is a big, big problem in this game, right? So I'm getting more toward the concept of what we can't see on the chart, right? Because this all has to do with misinformation. So resistance, but we can't just assume that just because the resistance is there and just because the trend is range bound or there's no trend, we can't assume that it's going to hold. We need proof it's going to hold. We need others to act on it first. We don't just step in front of it, right? This is where you need confirmation. The Trade Scanner Pro offers that type of help because it's a confirmation tool. You would simply turn your Trade Scanner Pro on and you'd work on a smaller time frame, of course, because you don't want to use this time frame. This time frame is your bigger picture reference. You can use this time frame for bigger picture trades, but I'm assuming you want to work on a smaller time frame, even for swing trades, like a 4-hour, maybe a 1 hour, something like that. And that is where the Trade Scanner Pro will give you a confirmation at a bigger picture level. When I've demonstrated Trade Scanner Pro previously, I always show you two charts, the bigger picture and then the one we're going to act on, right? The bigger picture gives us the context. That's what I'm trying to build here for you, the context, so that you now have a narrow range of expectations that are in line with the market. Which one is the market going to choose? That's up to the market. As you know, I don't pretend to know the future, okay? And that's what I try to help people with. There's a lot of people out there that claim to know the future, and they know this and they know that, and the market's going to do this and blah, blah, blah. It's all nonsense. We can't know the future. There is something we can know, but we'll talk about that in a minute. But the point is, you can't go into this with an opinion, especially on a week with low volume like this. So we got confirmation on this time frame. I'm sure it's on smaller time frames, but we'll check that soon. We took out yesterday's candle. Can you see yesterday's candle on this chart? Let me make it big and let me put it right in the middle here. This is a pin bar type of candle, is it not? And we took out the low of that pin bar. The low of that pin bar was 63,793. So once that low is taken out, that was the signal on this time frame. Now, the Trade Scanner Pro most likely gave you signals on much smaller time frames at much better prices than that. We'll have to check and see. But not only do you have that situation, right? You don't want to just get obsessed with what's going on here. You have to look at it relative to what's going on around in the area. Look at this. There was a lower high here, right, that touched the resistance area. Remember, these support and resistance levels are not precise. They can be expressed as a zone, right? So it kind of touched almost, and then it goes slightly above, and it gives us another signal. This type of pattern is a failed high. You get them all the time. Look up here, right? Touch, goes slightly higher, and then gets hammered. That's a failed high. That's meaningful. So it means that helps build the argument that, yes, there are people selling up here, but we can't see them. until we get some evidence, right? And now this is where, once you have your confirmation, this is where you can justify risk. But then the big question is, well, how do I measure the risk? And how do I measure my profit objective? That's what the Trade Scanner Pro does. So I don't have to do that here, right? We'll talk about that soon when I show you the Trade Scanner Pro. But the point is, we have our signal, and at this moment, it looks like it's trying to follow my suggestion. So you say, well, how do you come up with these suggestions? Do you have some kind of magical tool or something? No, I'm using the support and resistance levels, and I'm using the context. Those two components, right? Context can also be trend. It's interchangeable with trend. The trend is range bound. We're at a resistance. Support and resistance levels tend to hold in a range. So I should be expecting this to hold. And the market needs to confirm that. I come up with my idea. The market needs to confirm it, because I can be wrong. But the market can never be wrong. The market is always right. That is the position that I always take. So I have my idea. I anticipate. The market then confirms. And even with this confirmation, I can still be wrong, because the next candle can completely reverse, right? Then we can get a green candle tomorrow that looks like this. If some unexpected news comes out, that can happen. That's a possibility that we have to be prepared for, okay? Should I be going long for that possibility? It's a lower possibility, so no. But if I'm on a 1-minute chart, for example, a move like that, if I'm on a 1-minute chart, a move like this would offer plenty of opportunities on a 1-minute chart, because there's a lot of opportunities on a 1-minute chart. And if there's such a broad move, a big move on a small time frame, there's going to be a lot of action on that time frame. I'm not saying that's going to happen. I'm just saying it's a possibility that we have to be prepared for. Again, we should always be considering a narrow range of possibilities, but not all possibilities. Like, for example, one possibility is that Bitcoin can go to 100K. But is that within a range of reasonable possibilities right now? No. Is Bitcoin going to be at 100K tomorrow? Probably not. So that's not one of the possibilities that I should consider, especially if I'm looking to day trade this. Does that make sense? So you got to stay within the scope of your time frame or your strategy. So this is why when I went over the steps to using the Trade Scanner Pro, you can find that on my YouTube channel. It was back on July 3rd. One of the first things that you have to decide is, are you going to day trade or are you going to swing trade? You must know this consciously in advance before you do anything else, because that's going to shape how you come up with your narrow range of possibilities. A day trade possibility is not going to be the same as a swing trade possibility. The swing trade possibility is going to have a wider range because you're dealing with more time. Does that make sense? Okay. So any questions about that? Now I think I covered this Bitcoin situation, right? You understand what I'm talking about. Let's talk about the invisible part here. The part that I wrote the title about, okay? Part of the chart you can't see. What do I mean by that? So when we look at charts, this is very important. This is important for mindset, and this is especially important for day traders. You must have this mindset, or otherwise you will fail. I can't emphasize that enough. When we look at a chart, especially if we have no experience, we just see what we see, right? We see what we see. And we assume that we're looking at complete information. We're looking at a complete picture of information. And what's ahead of us is irrelevant because we can't see it, right? But the thing is, there's something ahead of us. And someone can see it. That's the problem. Someone has an advantage over us at all times. It's usually the market maker. Why? And what market maker? What are we talking about here? So there's this thing called payment for order flow. You should Google it. And basically, brokers and exchanges or whatever, they sell your information, your order information, to someone who's willing to buy it. This is a common practice, and it's widely known, and it's legal. They sell your information to a market maker. Why does the market maker buy this information? Because it's extremely valuable. They're willing to pay for it. What information are they buying? Your order flow. So that means when you place an order, it gets routed to someone specifically. That means when you place a market order, or you place a limit order, or a stop order, they see the orders in aggregate. They can see all the orders from all the people that they're paying for, right? So if they have 10,000 people, they paid for order flow for 10,000 customers, and these customers are doing all kinds of things, right? The market maker can see that in their order book. Now, understand something. The market maker is not a person. It's most likely a bot. It's an algo. Market makers are not people anymore. We like to think conspiracy theory, oh, there's a guy. No, there's no guy. In fact, I can tell you, more than 10 years ago, I used to work for Forex.com, all right? I was in sales. And there was a trade desk at Forex.com. And at the trade desk, there were people. But what were those people doing? Because I was very curious about that. You want to know what these guys were doing? First of all, they were college kids. They were not like experienced traders. They were kids out of school with economic degrees, right? And they only had two jobs. One job was to pick up the phone when someone wanted to transact a large order. So if someone had $1 million that they want to buy or sell, they couldn't do it over the platform. They had to call the order in and be like, okay, $1 million, right? And this guy's job, like a clerk, was to basically do the transaction. The other job that they had was to close positions on people who could no longer meet their margin requirement. Back then, that wasn't automated, all right? Back then, a person would close your position. At the close of the day, you went beyond the margin requirement, they close your position on you. And that's that, right? Those were the only two jobs. Now, I would imagine today, because everything else, by the way, was automated. Everything else was automated. So these guys were not like they weren't expert traders that were trading against you. They weren't. They were just dopes that were doing clerk jobs. Anyone could have done these jobs, right? I would imagine that today it's all automated. Probably all that stuff too. And other markets are automated. If it's payment for order flow, it's definitely automated. So what's the point? The point is a machine knows what you're doing as a group, you and thousands of other traders as a group, and it knows how to capitalize on that information. So this is very important. This all has to do with the order book. And you say, well, what order book? I can pull up the order book on Coinbase Pro or whatever, your broker, and you can see what's going on, right? Well, you think you can see what's going on. They give us one type of order book, the retail trader, but they can see another type of order book. And that is, for example, they can see where stop orders are. A stop order is a potential market order, is it not? It can also be a limit order, but usually a stop order becomes a market order when it's touched by the market. So those are potential orders. We don't see stop orders on our order book. That would be very valuable information, don't you think? So stop orders, a lot of times, could be part of this process, right? Stop orders can be areas where support and resistance develop and change. So for example, when you have a situation like this, right? You have a support and then it breaks. Big red candle breaks, right? Perhaps there were a lot of stops in this area, right? That were never touched. And then when momentum gets strong enough, it pushes through and all those stops become sell orders. And next thing you know, because those are now market orders hitting the market, next thing you know, it gets hammered, right? Imagine if you can see that and those orders getting tapped and becoming market orders, you have a much better idea if it's going to break out or fake out, don't you think? So someone has that information. We don't. So here's my point. In the future, right? Let me see if I can. Let me do this. Let me just erase this part of the chart here, right? So we only see this. Okay. In the future, it's our job as a trader, even if you're a swing trader, it's our job to think about what's here in the empty area. Okay, not what's behind us. We're taught to focus on all of this. Yes, there's some valuable information in the history. There is some, but it's very, very limited. So my other point is most of the information that we consume is useless. Please comprehend that. it's useless. So if you chase after news, you follow someone that's giving you some kind of secret, someone's teaching you how to use an oscillator because it gives you some kind of blah, 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 it's all nonsense. It will not help you. That's why you can focus on it and you could learn it for a year or two and this and that. And for some strange reason, you still can't get ahead. And that reason is we have no advantage. But someone has an advantage over us. So when you have the same information as everyone else, you're using your RSI because everyone else uses the RSI. You have no possible way of beating the market consistently. You are at the same level as everyone else, which means your outcomes are mostly going to be random. You'll make money sometimes and you'll lose it right back. And because there's a cost involved, you'll never get ahead. That's the formula. And the purpose of the retail trader is to make others rich. So you put two and two together and you realize, wow, I got problems here, right? So my goal here is to get you out of that mindset so that you can think of this more as a professional and be better prepared to capitalize on the mistakes that others are making now that you're probably making. So here's my point. When you see the white area of the chart or the blank area of the chart, it's your job to try to put the puzzle together, right? We're blind. We can't see. So what we have to do is we have to use historical information on the chart to help us get a sense of where these inflection points or these reaction points are happening in the order book. And what's happening there, again, they could be groups of stop orders being taken out. There can also be an area where there's a large buyer or seller, someone that wants to buy or sell, or a group of people that want to buy or sell, but they don't show their intent. They don't advertise it. If someone has 20,000 shares to buy or 10,000 contracts to buy, they're not going to put it on the bid. Because if they do, everyone's going to jump in front of them and they're going to get a much worse price, right? So they buy one at a time. In fact, they may put a big offer out to scare people and get people to react to sell so that they can get filled at good prices. Meanwhile, they know that they're trying to buy. They're a buyer, but here they are, they're selling. That's an old trick, right? We can't see that. So my point is, you want to find these inflection points on your chart and you want to anticipate a reaction in the future. So what you're doing in that way, what you're doing is you're painting a picture of what can happen here before it's there, right? You're coming up with your trade idea, your premise. You're narrowing your range of outcomes based on this part of the chart that we cannot see. Support and resistance levels are a nice way to do that because they're based on a historical reaction that was brief, but it gives us a place where we can anticipate something. Anticipate. An oscillator will never help you anticipate because it's always backward looking. So you must think forward, right? So think about what you can't see. What should happen here in the future? Selling activity, because it's a resistance now. We're below it, and there's been plenty of reactions. It was a support. It became a resistance. It was a resistance, right? Support and resistance levels can flip, but the point is, when you're below and you come back above, chances are it's going to be a resistance. So that gives you a premise, something to expect in terms of order flow in this area. The next step, of course, like I mentioned before, is it needs to confirm. You start with your idea, the market must confirm. If the market agrees with you, you can then measure your risk and take a position. You measure your risk, you measure reward, you can take a position, right? Because the market says, okay, there is something here. Maybe it'll change, but there's something here, right? This is why we have to measure risk, because we can still be wrong. And that's it. Right? And then when you have a strong trend, that becomes part of the picture as well. That becomes part of the decision-making process. But when you don't have a trend, you really have to rely on the levels. And that's what I've been emphasizing. I mean, look at this 50K, right? This 53K area, and it touched 49K. Imagine all the people that were blind, okay? They had no idea what they were selling into here. And they banged it out, or maybe they got margined out, and they had no sense of that there's a stronger likelihood that buying would take place here. and then the tail formed, okay? And then we get this inside bar, all signs of buying, and eventually look, right? It went from 49K to 64K. Now, are you going to get the exact bottom? No, probably not. But believe me, there were patterns inside of this tail on smaller time frames that could have at least aligned you, because they confirmed, in an area where you were expecting that type of behavior, because you're not reacting to what you see. You are preparing for what should happen. Does that make sense? Because you do not want to react to what you see. You want to prepare for what can happen. That is the whole idea of the part of the chart you can't see. Does that make sense? You have any questions about that? I know some people may be bored. You're like, oh man, come on. How do I make money? But this is a very important part of how I come up with these ideas. Okay? Because again, I'm not focused on high or low, and then the RSI says oversold on the 1 minute, and then it's going to go higher, right? That's not what I'm doing. As you see, I never have oscillators on my charts, right? They can play a role, but you have to understand how they fit into the picture. I'm relying on what can happen in the future. And then I'm letting the market confirm, or at least when I write my article, I'm saying, look, here we are, but the market needs to confirm. So you should be prepared. This is a game about, this is about preparing and adjusting. That's what I wrote about, game of skill, game of chance in my article. Most of you are playing a game of chance, like a slot machine with all the fancy animations. You see a slot machine, how they are today. They're all fancy. Imagine if you're sitting there and said, I'm going to analyze all these animations because I think it's going to help me have better outcomes from my bets. We all know that that's foolish because a slot machine, right? We don't associate a slot machine with wealth, or we do not associate a slot machine with a financial market. We know it's entertainment. So no one sits there and analyzes the animations. But if someone came out and said, well, slot machines there's a fundamental thing to them and blah, 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 right? Then you're going to have guys analyzing the shape of the button, the size of the machine, the loudness of the music that comes out, the animation, the theme of this, the colors, all this nonsense, which has nothing to do with the outcome of the bet. That is what you're doing here most of the time. You're doing all of this nonsense that has nothing to do with the outcome that you're facing. So you have to focus on the information that can give you some glimpse of what the outcome could be. Does that make sense? And that's what, when I talk about support and resistance, I talk about trend, I talk about context. Those are the components that can help you see the invisible area of the chart, at least get an idea and be prepared. So with this in mind, right, I point to a test back to 60K this week. Why? That's the next support on this time frame. There are other supports, right? We can argue that there's a minor support right in this area, right? What is that? 61.8 area. There's some support in that area. But let me ask you guys a question. Do you think that this support in this area right here, I'll draw a little rectangle there. Do you think that this support, old resistance, right, new support, do you think that's relevant on this time frame? Yes or no? Let's see who can answer. Monica says there can be loads of money made between 49K and 70K. Absolutely, Monica. Yes, loads of money, she says. That is correct, because there's a lot of movement, of course, on smaller time frames, right? So this question here, do you think this level here is relevant? Lad says it's not. Good answer. It's not, because this would be relevant on a smaller time frame. So if I'm working on my 30-minute, my 15-minute, my 5-minute, and we're pulling into this area, I see that there's action here, okay? But I would be expecting that as a brief opportunity on a small time frame. Okay, why? Because there's no major reactions here, right? If we touched up here, right? If we touched this level, 68.18, whatever, and we pulled straight back, I mean, we got hammered, and we're testing like 53K again, I could say, okay, there's something significant there. But we gyrated, and just really churned. This is not a major reaction, so it's not a major level, right? I look now. This inflection point is pretty major. 49K all the way up to 64K in just a few days. That's pretty significant, and we could have anticipated that because look at this. History repeats itself, right? And you say, okay, what about what if we had no reference for this? How do we know this was coming? Look at this. There's a relationship there. Okay, it's not clear to see, but that's where that relationship is how I came up with this zone. It has to do with this low and this low, the vicinity, and those two lows. Now this dates all the way back to like what, March? No, May. What is that? May? This is back in May, this low back here. Okay, and then these two lows are relevant to that. That's why you need to know your bigger picture levels. Does that make sense? So you should be thinking as a buyer. In fact, when we were here, I had a stream and I told people this is a good place to invest. I think Monica invested here. A few people I know bought into this around here. Nice job, right? If anything, you should not have been selling in that area. We could see this after the fact now, but at the time, the candle looked horrible, right? At the time, it was like a big red candle. And most people who just take what they see at face value, oh, this is a bad time to buy. No, it's the opposite. But that's because I know the bigger picture. It was a range low. This wasn't this was not like a spectacular new low. This was a range low relative to these other lows. Great place to buy in the vicinity of a bullish trend. This trend is bullish on the bigger picture. It's bullish. There's nothing bearish about this. So you have to have that perspective, but you have to be able to put it into perspective to decide what type of trade or investment you're looking to do. This is why time frame selection is so important. All right, are we good with that? Okay. I could talk about this for hours and hours and hours. It was a good move. Yeah. Oh, yeah. Okay, so that's my point. Look ahead. Consider what you can't see. Use your levels to give you an idea of what to expect, but then let the market confirm. So let's talk a little bit more about confirmation now. Confirmation is like a key part of this whole thing. And like I said before, the Trade Scanner Pro is a confirmation tool. So let's talk about that real quick so I can explain to you what it is and how it works. And by the way, you can sign up for the free trial. There's a link in the description. The Trade Scanner Pro is a trend following momentum reversal system. It's based on tools that I use that I've basically got familiar with over the years, because you have to understand, I've been doing this a long time and I'm an expert at one thing. All the stuff that doesn't work. I'm an expert at that. I can tell you in 2 seconds what doesn't work. So after a while, I was able to find the things that were the components or the items or the market information that does provide some type of value that helps me align with the market, not forecast the future. So the Trade Scanner Pro first identifies a trend. So let's say the trend is bullish. It then looks for a pullback on that trend. Once the pullback is measured, it looks for a change in momentum of that pullback. Once that is determined, it produces a signal. The signal comes in the form of trade suggestions. It gives you a stop loss order, it gives you an entry price, and it gives you a take profit, which is usually up here, okay, in the case of a bullish suggestion. The orders are typically 1.5 times away from each other, meaning whatever your risk is, which is defined by market movement, it doesn't just come up with some random number. If your risk is 100 points, for example, your profit objective will automatically be 150. That's what 1.5 to 1 means, right? You can change that. I'll show you real quick, but that's how the Trade Scanner Pro works. In trend mode, there's something called counter trend mode, which is for advanced traders. It's not something I suggest for beginners because typically counter trend trades are lower probability. You're going against the trend or the momentum. Counter trend is when it finds these movements right here, and it will give you a trade suggestion based on the momentum change there, and it ignores the trend. There's a place for that. And that place, like I said before, are potential reversal points or inflection points like support or resistance levels. Because your trend, as defined by the Trade Scanner Pro, may not be in line with that support or resistance level. When I turn the Trade Scanner Pro on over here, as you can see, placed in order, there's a trade open. What is this? Is this a long? Yeah, there's a long open on this time frame. But if you notice up here, it says trend is bullish. That's how the Trade Scanner Pro judges the bigger picture. It says the trend is bullish. Okay. Now, that's basically how it works. And when you have to take a trade that goes against this trend, that's when you would go into counter trend mode. But like I said, there's special situations for that, and that takes a little time to get used to. The whole value proposition of the Trade Scanner Pro is basically to confirm potential ideas for you and measure your risk and give you a profit objective without you having to figure that out. It also has a trailing stop. So if the trade decides to go beyond the take profit, you have a point of reference to follow it further and make more than the 1.5 to 1 reward risk. What this accomplishes over time is you basically reducing your risk over time while skewing your reward risk ratio higher in your favor over time. So if you lose typically half of your stop loss, right? If your stop loss is typically 100 points, but because of the Trade Scanner Pro, you're getting out and you're losing 50% of that. So you're losing 50 points, but you're reaching the 1.5 to 1 reward risk. That's 3 to 1 reward risk over time. Okay. Okay. Stian says here, could it also help to draw a trend line with the highs of the consolidation to anticipate possible reversal in the future? Yes, that's what all these straight lines are. All these these horizontal lines on my chart, they're basically noting potential reversal points, right? And Steen brings that up. We're actually working on an extension for the Trade Scanner Pro or an overlay where it will draw these lines for you, right? He's still working on it, but that's going to be a nice extension. That's not an update. That's an extension, which means it's a separate thing. It's an overlay, okay? And that'll be available soon, okay? So that's how the Trade Scanner Pro works in a nutshell. If you have any questions, let me know. But now what I want to do is I want to show you how we can use it. So I'm going to switch charts now. And let's see, how am I doing with time? Man, I talk too much, man. I definitely talk too much. All right. I like to have a little more time because sometimes these trades take some time to play out. All right. I'm going to go here and I'm going to switch this chart over here to Bitcoin. Okay. Perp. This is the perpetual futures contract. I like to use MEXC as an example, just for example purposes. And I'm going to change this time frame to an hourly. Now, like I said before, if I'm going to day trade or whatever, before I take a trade, I have to decide what time frame I want to work on. So this is why it's important to decide before you do anything else. Are you looking for day trades or are you looking for swing trades? In this example, I'm going to look for day trades, right? So I know that if I'm looking for day trades, I'm going to take trades on a smaller time frame. It could be a 1 minute, it could be a 5 minute, it could be a 15 minute. I suggest 15 minute for beginners, but day trades are typically done on smaller time frames, okay? Like between 1 and 5 minute. So I have my larger time frame because what? I'm trying to gather levels in context so I know I can formulate my idea in advance because a Trade Scanner Pro is going to confirm the idea or not. As you can see here, there's a trade. This is a bullish trade, it looks like, on the hourly, but I'm going to ignore that. I'm not looking to take trades on the hourly, so I don't want to be confused by that. I want to take trades on my smaller time frame. If you notice here, on my smaller time frame, okay, the trend is bearish. Notice it says trend bearish, but over here, trend is bullish on the hourly. Which one carries more weight? The hourly, right? This is important. So if my bigger picture is bullish and it looks like we're fooling around some kind of hourly support level, like I said before, there are support levels and resistance levels on every time frame. I have some potential levels here. I should probably be open to the long side, right? This over here is telling me bearish. So this is confusing, right? What do I do? You have two choices in this situation. Now, again, I'm going to get a little more advanced. So if you're a beginner, just please try to follow me here. You have two choices. You can wait until the 1 minute turns bullish on the Trade Scanner Pro, which can take an hour or something. I don't know if you want to sit around and wait. You can set notifications on your trading view. This is where the premium trading view offers a lot of value, because on the premium version, you can set many notifications, where on the free version you can only set one. But you would simply set it over here. You would just pick the Trade Scanner Pro over here. Where is it? Trade Scanner Pro. You would just pick that, and then it will let you know when a signal appears. It will also let you know when a trade is exited. It will let you know when a heads up appears as well. I'll talk about the heads up in a minute. So in this situation, I should be open to the long side unless this just blows through all those supports. But there is some kind of action here, as you can see. Now, I'm going to turn the Trade Scanner Pro off on the hourly because I don't want to be confused, right? I'm only interested in the level and the trend. Does that make sense? That's pretty much bullish. There's really nothing bearish. I mean, look at this move. This is bullish, right? That's a pretty sharp move higher. And we're not really pulling back. It's a consolidation. If we were pulling back, we should see a sharp move where the whole move just gives it right back in like, one or two candles. We're not seeing that here. So the market is sitting around at this level, right? Look, it broke out of this consolidation back here, broke out. Can I get a line? There we go. It broke out, and now it found a new level. Okay, no problem. That's all I need to know as a day trader. I'm not messing with news. I'm not following any gurus. I have no oscillators on my chart. I'm not messing with moving averages. I just have a level. Now, the Trade Scanner Pro, this is where, like I said, you have two choices. You can wait until this turns bullish so that you have a momentum continuation type of trade, right? And then eventually it aligns with this bigger picture. You can wait for all of that. It takes patience. Or you can do what? You can switch your mode to counter trend mode. Now, in the settings panel of the Trade Scanner Pro, you could put your trailing stop on. In fact, when you sign up for it, you have to turn that on if you want to. Show previous trades, okay, which will show you historical trades on the chart. That's typically off. The heads up, what that does is it paints orange candles on your chart. The orange candle, it also put a column usually on your chart. And then we put counter trend, okay? See these columns that show up with these orange candles? Those are heads up, or basically a warning that a signal is likely to appear soon. This will show up in your notifications, by the way, right? TradingView will send you an email or whatever, however you want to be notified when one of those pops up. So you have an idea, oh, this thing is going to give a signal soon, so you're prepared. When you get a green column, obviously that's for bullish, right? If it was a red column, it's for bearish. Now it's bullish because I switched to counter trend mode, which I explained was advanced because it's usually lower probability. See, my trend is bearish, but I'm looking for longs. Why am I looking for longs? Because we're at a potential support over here. Do you see that? That's the reason. I could be wrong though, but I'm going to bet on the support. Now keep in mind, time of day, stock market just closed. Not a good time to usually trade this thing, especially on a 1 minute. And we're in the slowest week of the year, just to add some more context. So please keep that in mind, all right? I really should not be doing this at all right now. I shouldn't be looking at this. But let's see what we can learn. And let's see if we can find a trade that makes sense. As you can see, there was a trade attempt over here, but it failed, right? It hadn't gone anywhere. All right, no problem. This momentum, we can argue, is bearish, so we have to be careful with that. In fact, when you have a bearish structure within a bullish trend like that, what you will see on the trade scanner is conflict. See that word conflict? That's what that means. It means that you're getting a movement that goes against the trend for a sustained period. It's going against the trend a little longer than it should be. So that's a conflict. So it can also give you a heads up that the trend may be in the process of changing. It's not something you trade on. It's just something to make you aware, okay, this thing may be changing. So you don't get caught up in this idea, oh, it's a long, it's a long. It may be changing into a short, but I'm not going to short it here. Okay, so just something to keep in mind. Now, if I'm going to short, I should be looking at these levels up here. That's a place to go short. Any test of those levels or somewhere nearby, maybe the midpoint of that area. A lot of times, you'll get a test of this area, could be a nice short for a day trade. Keep in mind, what are my profit objectives for a day trade? Well, the Trade Scanner Pro is going to tell me, right? It's going to be like my risk on a 1 minute chart is going to be like 150 points or something like that. And my reward is probably going to be something like 200 points. That's typical to a 1 minute time frame. As opposed to the parameters on an hourly chart. If I turn this back on, I mean, look at this. If I measure this real quick, what is my risk on the hourly? The hourly called the long here, and that's 793 points of risk on an hourly. If you're not interested in 793 points of risk, you should not be taking trades on the hourly. Okay, but it tells me the risk. It also showed me the profit objective, which is going to be more than 793 points. I'm interested in the 1 minute. Okay, so the numbers are going to be smaller. It's trying to turn around here, but I don't have a signal. Okay, so I'm not going to do anything. There's no reason for me to do anything. I don't even have a warning. I had previous warnings, but no new warning. I got nothing here. I got nothing to do. So in this way, the trade scanner can keep me out of trouble. Okay, another thing I can do, if I want to be super aggressive though, I don't recommend this if you're new, but just I like to talk about, all kinds of things. You can change this time frame if you have the premium version of TradingView. You can change this time frame to like a 15-second chart. Not something I recommend. The sub 1 minute charts are only available on their more expensive plans. But I mean, look how many trades this thing called. They all stopped out. Look at this. So this is why counter trend could be very problematic if you just take a trade for the sake of taking a trade. You can't do that. You have to have your level in advance. You have to have your plan, like I pointed out before. Does that make sense? What's going on here? Okay, I keep getting kicked off of Rumble, and then they keep putting me back on. Anyway, what was that? Okay, so yeah. So that's one thing you can do when sometimes, you're on your 1 minute and you're not getting a signal. And you're like, man, is this thing ever going to give me a signal? Meanwhile, the market's moving. Sometimes you have to go to a smaller time frame. This can happen, for example, when you're on your 15-minute. The market's going the way you're anticipating, but you're not getting a signal. You may have to go to like a 5 minute or a 3 minute. You may have to do that. That comes with time. Oh, nice little pop. That comes with time. All right. So let's go to my 30-second. Let's see if I can take a trade. Is there a signal there? Yes, look, there's a signal. All right. On a 30-second chart. So that's like halfway there. Do I want to chase this thing? I'll buy one. I'll buy one contract. It's a 1 minute chart. Why not? This is on paper, by the way. All right. So I bought one here, but notice the price. I bought it up here. Is that a good price to buy it? No, it's not. This was the price to buy it, the blue line. This blue line, that's where I should have bought it, or at least when it closed above it like that, right? But it's a 1 minute chart. So, and I'm just doing this for demonstration purposes. If this was real, I should be waiting. Okay. Now, what can happen here? Maybe we go to the take profit objective, which is how much? Again, on a 1 minute, let's talk about a reward risk, which the trade scanner nicely defined for me. My risk is 62 points. Okay. Much better than 700 and something points. And my reward from the entry price is 94 points. That makes sense on a 1 minute, right? But now I took a bad price. So my risk reward is not like that. My reward potential is only 32 points. And my risk from that entry price is all the way over here. So my risk is 125 points, basically. As you could see, the reward risk wasn't that good. I took the trade anyway, betting on the momentum, right? Now, if you notice, my trailing stop has just appeared and has reduced my risk slightly, but the trade hasn't been open very long. So it's going to take some time for this trailing stop to get moving, right? It needs the market the candles need to close for this thing to start moving, right? You see it jump there a bit. Now, we went right back to the entry price. Notice, this is why I said buying it up here is usually a bad idea, okay? It went straight back to the entry price. You see it bounced off of it. Okay, I was hoping for something like that because I want to see if I could buy a second one for that reason. So I'm going to do it. All right, so I got long a second one. This is really where I should have bought it the first time. Okay. I'm not reacting to that candle. This is a 1 minute chart. All candles are going to look very dramatic on here. Okay. Notice my 1 hour. There's really nothing happening here. Notice it's really nothing. It's just 1 minute drama. All right. My take profit, my trailing stop is moved up a little bit more. Now, keep in mind, it may go straight to the trailing stop, but my risk is somewhat reduced. I'm hoping that this thing can pop up a bit, right? And at least help me cut my risk in half, but we'll see. At this point, this game here is up to the market. It's not up to me anymore, right? The orders are on my screen. The order suggestions are on my screen. It's just up to me to stick to the orders, meaning we go to the stop, I got to blow it out. I got to respect the orders. That's all. So my thinking is now pretty much over. I can do some adjustments, like I can add and subtract. Like here, you know, if it bounces off of this blue line again, that might be an opportunity to add again, possibly. It's a very advanced technique, but those are the only choices I really have. Okay, so it's either that and we go up to the profit objective, or we just go to the stop and I bang it out. That's it, right? So that simplifies my decision-making process. So even if this is a losing trade, right, the idea here is to show you the value of how it simplifies your decision-making process. Like I said before, this is a bad time to trade. And as you could see, like the market tried to start, oh, it got stopped out. All right, so let me go back to the thing. Let me bang this thing out. I have 2 contracts, bang it out, sell them. Okay, out. That's it. I banged out 2, yeah. And that's it, right? It tried, it failed, and now I'm still at support. It may give me another trade, but there's nothing at the moment. Now, I'm not going to reverse and start shorting this thing now because that would be a bad idea, right? I'm not going to short this thing here. Look where I am. So you cannot react. Look, I'm getting a warning again. It may be a failed low. Let's see what happens. Sam, good question. It can, but the NASDAQ futures are nuts. So you really have to understand what you're dealing with. It can work in any market, but when you're dealing with like the NASDAQ futures, you just have to understand the nature of that market and how fast it can move, right? A lot of times you have no choice but to work on 1 minute or 30-second or 15-second. You have no choice because that market moves so fast. See, look, I'm getting the warning. See that? So I may have just gotten shaken out. Okay, no problem, but I'm respecting the stops. You got to do that, because if you don't, if there's a sustained move and this thing breaks the support, I'll get hammered, right? And I don't want to do that. The other thing I don't want to do is reverse now. You say, oh, but it's going lower. Maybe, but this time of day, most likely we're not in a trend. Most likely this is just noise. Time of day is very important. See, look, turning right around. All right, I'll probably get a signal after this close. Again, I'm on a 30-second. I'll take the new signal if we get it. And this time I'll buy 2 because I had 2. There it is. Again, I knew the signal was coming because I had the heads up, the orange candle. So I just bought 2. Let's see what happens with that. How am I doing with time? Okay, I got a few minutes. Now, keep in mind, I'm on a 30-second. This is a wild chart. It may go straight back to the stop. That can happen. I'm betting on this support level. Okay, in a reluctant market, a slow market, there's no momentum right now. Let's see how it plays out. Now, remember before, I bought at a bad price. I bought the first one at a bad price. Good thing I bought only 1 there, and I got blown out on both of them. I bought the second one nearer the entry price, and I got blown out of both of them. Okay, this time I bought at the entry price. Let's see what happens here. Let's see, and also another thing let's check is the 1 minute. What is the 1 minute doing? Oh, I got a signal on the 1 minute too. Okay. So I'll give it a chance on the 1 minute. The 1 minute gives me a little more room. Sometimes you can have multiple signals occurring at the same time on multiple time frames. That 30-second might be too tight, right? So the 1 minute gives me a little more room. It still may get stopped out, but I have a little more room. How much more room do I have? Let's see. How much is this? 90 points. Okay, so that's a 90-point stop. Let's see if that holds. Oh, Sheplik is watching me. Hey, Sheplik. Oh, what is that? Oh, he's not watching me. What is this? Oh, he read my idea. I wonder if that's new. Was that there the whole time? Or did that just pop up? Sheplik's the guy from TradingView. He's like he's like a main guy over there. He runs their community. He's a good guy. I met him one time. And if you mess around over there, he makes sure that your account, gets banned. Anyway, that was nice of him. So you see where we're going with this? Any questions? I know this is an uneventful market. I know it sucks, but you need to see this because you may face this yourself, and at least you get to absorb this experience and not have to lose money. Okay. Again, I'm doing this on paper, by the way. This isn't real money because I would not trade real money at this time. I know better, but doesn't mean that the trades won't work. It just means that the probability is lower, right? Do I want to trade lower probability times? No, you have to know that. If this was 9:30 a.m. my time, I would be more interested in what's going on because that's more of a appropriate time. That's when the stock market opens, and that's when we have volume. Now, keep in mind, we're after the stock market close in a super low volume environment because we talked about the bigger picture, right? Earlier, told you, lousy volume environment. So this is what we're going to be dealing with. So if I'm going to be dealing with this, I should at least be in the highest volume in that low volume environment, which would be like the open. Does that make sense? Okay. A lot of valuable lessons here today. Any questions? This trade isn't working. It just doesn't want to cooperate. I got another little warning in here, right? I got another one. Look at this, these green columns developing. All right, so I'll try to give it a chance. Steen, that was a recent update by Steen, these columns. Before it was just the orange candle. At least the column I can see, even if I can't see that candle, because sometimes they come in very small, at least I could see the column. And that lets me know, oh, there's warnings here. There's warnings. That means another signal is likely to pop up. Okay? Is it still a good idea to look at the S&P when... That's a good question, Steen. Is it a good idea to look at the S&P when you're trying to trade Bitcoin? The stock market can provide some sort of, I guess you could say, point of reference because there is a relationship there. I tend not to look at it, but you can. It's going to depend on what you do. Right now, like the S&P right now is going to be meaningless because it's closed, right? The stock market's closed. So on certain days, you'll notice the correlation might be stronger than others. So that's going to depend on you, but you can use that as sort of a reference. You'll notice like the NASDAQ, S&P, and like Bitcoin, they're all up together, right? That may have something to do with whatever, the tech relationship. I don't know. But if you don't want to use it, that's okay too. See, like we're getting these warnings and this thing's just stinking. Look at this. We just keep messing around with this support and we're not breaking it decisively. It's hard to hold on to that, right? But you have to respect the orders. So let's see. You know how many times like it'll go right to the stop and then give you like a massive green candle like right after? It'll go right to the stop and then it'll do this, right? That happens. See, that's trying to happen there. See that? There's no way to know that that's coming. This is all random price action. See? Now, look, we're going back above the entry. I'm going to try to add one based on that because we went back above. All right? So now I have 3. Okay? Ooh, getting a little feisty there. All right? Now, you saw how long it took me to place that order, right? That was a market order. I wasn't able to buy it on the cross of that blue line. I bought it up here somewhere. Right? So my prices kind of stink. Right? But look how fast we're moving. Okay, cool. Do I care what's going on? Is there news? Like that, you should not be reacting. Oh, straight to the profit objective. All right, so I'm going to get out of one. One candle, too. Nice. I'm up some money a little bit. All right. Close one. Let's sell one. I still have two. So now let's give this a chance. Let's see if we could ride this a bit. Now, should I be surprised here? Notice I keep this chart up, the hourly chart. There's some support here. This is what should happen at a support level. Exactly this. The squeeze. What's happening there? What happened is you have your people who watch your RSI and blah, blah, blah. They all short this thing. Oh, it's going lower. And then they realize they're caught. Okay. And then they get squeezed and something like this. I may be the one being like, that's going to be me in a moment here because we're giving it right back. All right. Good thing I got out of one. This is not a good sign. When it gives it all back like that, not a good sign. But let's see what happens. It went to my profit objective. So when you get something like this, it looks beautiful, and then it gives it all back. Usually what that means is it's a fake short squeeze. They get everyone, out of their shorts and long, and then this, right? I see that kind of stuff all the time. It's just noise. What am I going to do? So here's what I'll do. I'm still in two, right? They're against me again, but I got out of one. So at least my risk is reduced. If we go back above this blue line, I'll buy one back. I'll buy it again. Let's see. But my point is, this type of vertical price action here, this vertical type of move, that is what we should see at a support level. So you see how that kind of comes together? The support level, there's no guarantee that it will hold. But as long as it holds, I have to try to play it. I shouldn't short it. If I'm going to short it, it needs to break the level first. And then I look for a continuation pattern. Because shorting this thing now is extremely risky. And it will only look good if this happens to break and keep going. Like, oh, wow, you're a genius. Well, if you do that 100 times, you're going to find out it's a bad idea. Okay, look, we're back to the blue line. Now, keep in mind, I'm doing this like on a 1 minute time frame. You shouldn't be doing this on a 1 minute time frame. You should be doing this like on a 15 minute. It's not so wild on a 15 minute. It's a lot more stable. Okay. So I just bought my third one back because we're back at the entry price. Look how many times we had the entry. The first entry was here. Okay. Then I took another entry based on this break, but I got a bad price. And now I just took another entry because we went back to this line again, the entry price. Now I'm doing that from experience because I know how this works. I don't expect you to know how to do that. Okay. And it is risky. This thing can just turn on me and go straight to the stop and I get hammered. That can happen. So I don't want you to think I'm showing you some kind of magic here. Okay. This is not a magical tool. What this thing does is it simplifies my decision-making process and it gives me a point of reference for my risk and my profit objective, right? I got out of one up here. Why? Because we got up there and I got out of one. You would not know to get out of one otherwise. You'd be like, oh, this thing's going to 70K. I'm going to hold it, right? A lot of people would think that. But on my 1 minute, this is my profit objective. So that's what I should be looking at as my point of reference to get out of something if I'm going to get out. Can it go beyond? Yes, it can. But that's what I have a trailing stop for. You can't see the trailing stop right now. It hasn't popped up yet. But over the next couple of minutes, it will. And that's going to be my point of reference. If this thing goes beyond the take profit, I then have a trailing stop that I can ride. And that's what can make this trade. If this trade wants to run on the hourly, for example, if it wants to run and do something like this, right, that trailing stop can help me stay in it longer. So instead of capturing, 100 points or 120 points, whatever the profit objective is, I may be able to capture 200 points or 250 points, something that's not in this profit objective. So I'm letting the market pay me more. The tool opens up that possibility for you. Okay? That's the whole idea. That's the value proposition. So while we're waiting, you may be wondering, if you're new, how do I sign up for this thing? There's a link in the description, and I'm going to type the link in here as well. Let me type that in. So here's the link. You can go to this link, and I'll put it up on the screen. TSC. See, can I read it? Pro. All right, let me see. I have to make sure I spell that correctly. Okay, this is the link. I'll put it up here on the screen so you can see it. You go to that link, and it takes you to this page right here. This is my website, Market Signals Pro, and this is the Trade Scanner Pro page. It explains how it works, tells you about me, and then it brings you up to the registration page. You can sign up for 14 days for free. Okay, free. You can pay yearly. You could sign up for a yearly subscription, which you save 25% off the monthly price. So that comes to $22.50 a month. If you pay for the yearly, that's pretty cheap. And monthly, it's $30 a month. All right. That price is going to be going higher soon. Now, when you click on the subscribe now, it takes you to the sign up page, and you have to make sure that you fill in your TradingView username. It's very important. If you don't do that, you will not get your invite. Okay. The invite, by the way, takes 30 minutes up to an hour to receive. So please give it a chance. It's not instant. You will get an email that says, hey, thank you for signing up. Your invite should be coming in the next whatever, right? Usually within the hour, you get the invite, and it comes on your TradingView. Please don't send me 10 million emails saying, where's my invite? Give it at least an hour, okay? If you don't get it in an hour, then you could send me 10 million emails. All right, Stian. Well, and if you have, Stian says here, you can also connect your, yeah. So Stian's talking about the Discord here. You can synchronize your Discord once you have your membership, and you'll have access to these other channels, the bot channels, because we have the Trade Scanner bot. He's made some unbelievable updates to this bot. I mean, the bot now sends out like a nice picture with a chart, and it has all the orders. The Trade Scanner bot is the same as the Trade Scanner script here, except the bot looks at specific symbols and a specific time frame, and it doesn't do counter trend. That's good for people that are hands off, that don't really want to get involved in all this that I'm showing you here. You'd rather just send me the information so I can just trade on that. Okay, that's what the bot does. And we have more plans to extend the bot functionality as well. But if you're interested in that, if you're a Trade Scanner Pro user, you'll also have access to the bot, these bot channels. That's also where Trade of the Day is coming from. It's coming from the bot. Okay. Thank you, Steen, for letting us know about that. And amazing work. I mean, and eventually we're going to have these, the order suggestions, like you see all these order suggestions. We're going to have that on the chart that the bot sends out. That's pretty amazing considering where we were a year ago. I mean, and this is all of Steen's hard work. So please show the guy some love. Okay. Anyway, so you following me so far? So this trade, as you can see, we shouldn't be too surprised. It's not, not a good time of day. But one thing for sure, after everything we talked about, at this moment, this support level continues to hold. And it should. I mean, the general trend is bullish, right? The broader trend is bullish on this hourly. So we should expect it to hold. So far, I'm in line with the market. It can still change, but so far, I'm in line. Don't react to the individual candles because that's really not going to help you. You have to have your bigger picture first, and then the Trade Scanner pretty much simplifies everything else. Trade Scanner said go long. I'm trying to maintain this long. Price action is just gyrating around, not really doing anything. But as long as that support holds, there's a chance we get to this objective, which I will then unload another contract or two. Now, as you can see, my trailing stop hasn't appeared yet because we haven't been in this trade long enough. But eventually the trailing stop will appear and it'll start to close up this risk gap. Like you saw on that 30-second chart, right? That thing popped up pretty quickly because that was a 30-second chart. So the trailing stop will eventually come and do stuff like this, right? It'll move with the price as price closes and close up my risk gap. It's a new terminology I came up with there. This is my risk gap. because that's where my risk is. If I lose that amount, that's what I lose, right? It's a gap, and I want to close that gap. The trailing stop does that, but it takes time. If this thing is going my way, that trailing stop should appear and start following the trade. Eventually, what happens is it closes the gap completely, and I have a risk-free trade. And if this thing keeps going, then I have a profitable trade no matter what, as long as I respect the order, the trailing stop. Now, if I don't respect any of these orders, then everything here is just meaningless. So please, you have to make sure you do that. You do have to play that role. The bot can't trade for you yet, although that's in our plans. At some point, we would like the bot to be able to take trades for you. We're not there yet, though. We have a few other things we have to accomplish first. But anyway, okay, nice. We're getting near that profit objective. Let me open up my order book because I'm going to want to blow some out if we get up there. This time I'm going to blow out too, because I can't be streaming here all day, and I'll blow out too, and then we'll see if we can ride a runner. We'll give it a chance to run a bit. I mean, how far can this thing really run at this time of day? Probably not very far. I mean, look where we are on the hourly. I keep the hourly up here purposely to constantly have perspective. I mean, look where we are. Maybe we run up to this up here. What is that? 63.5, 66, whatever, up to this blue line. Maybe we run up there. That's kind of a ways from where we are right now. Right now, we're at what? 313. That's 200 points higher. So that could be a nice little runner. I may have to sit here all day. I'm not planning to do that, but you get the idea. Okay. So imagine this taking place on a 15-minute time frame or a 30-minute time frame. I'm doing it minute to minute, which is a million times harder. If you're working on a larger time frame, you're not going to sit in front of a computer all day long like I am here. You're going to check your phone every once in a while, right? Because it's not going to be so wild like this. You're going to use notifications from TradingView so that you don't have to sit in front of your screen. TradingView tells you, oh, you got an entry. Oh, your stop was touched. Oh, you got a warning. You have a heads up, right? Nice. Okay, can we pop up a little further? This thing can do it. We know we can do it. Just a few more points, and I'm prepared to sell. Look at how amazing that is, where I know what to do. I don't have to think. I don't have to sit there, well, I don't know, should I sell? What if this thing goes 1,000,000 points without me? Right? Like, I don't have to be confused about any of that stuff. The trade scanner defined it for me. I have a profit objective. It's right here. So can we touch it? I'm going to give it a chance. Can we touch? If we touch it, I'm blowing out of two of them. If we don't touch it, I'm just going to try to stay in and give it a chance and take more risk. Okay? It's very possible that I give this move back in 2 seconds. It can happen. But the key point here is I'm not reacting to the candles. The trade scanner has defined the trade for me. I simply respect the suggestions. My thinking is done. I'm not thinking. This was made for people that struggle with, where do I get in? Where do I get out? I'm confused all the time. What is the trend? How do I know this? How do I trail my stop? This thing answers all of those questions. It does it for you. Okay. So I don't have to react to candles. Look, I may have been shaken out over here. If I was just going to depend on candles, like, oh, these candles don't look good, I better get out. Oh, red candle over here, I better get out. Massive red candle over here, I better get out. Those are all typical reactions. Here, okay, red candle. All right, hopefully it doesn't give it all back. I'm not going to react. Okay, I'm not going to react. We had some positive momentum here. Let's see if that momentum can continue. That's it. The trade scanner has done the job for me. Look at my bigger picture, right? I'm long from a support. So other people that are interested in buying should step in. Remember all that talk we had earlier before about the order flow and the invisible part of the chart, right? That's what's transpiring here. I'm anticipating that the buying activity that we saw previously over the previous few hours continues to stick and gives me a chance to get out at a better price. And I don't even need this thing to go up 200 points. As you can see on my 1 minute, my 1 minute profit objective is way less than that. It's 140 points. That's the profit objective defined by the Trade Scanner Pro. Do you see that? It's very easy to make that mistake where you'd be like, oh, I'm going to give it like 300 points because we should get there. Right now, you're mixing up your opinions. You're mixing up your hopes. Trade Scanner tells you this is what your profit objective should be based on the price action on this time frame. Very simple. Either it gets there or it doesn't get there. That's it. I saw my trailing stop pop in there for a moment, but it vanished. Okay, I guess this candle needs to close. So you guys have any questions? I'll be wrapping up this here in a moment. I was hoping we could get to the profit objective, but I guess not. Again, very, very lousy time. Very lousy time to be in the market. Not only time of day, but time of year. All right. Any questions? There's my trailing stop. Closed my risk gap slightly. Okay. All right. Better than nothing. Do you guys see how this can be valuable to you? One thing I notice, beginners have a hard time appreciating this. Beginners want the magic button, you know? They want the magic thing that not only makes you millions of dollars, but also helps you grow your hair back, lose weight, and get a hot girlfriend, right? That doesn't exist. The people that tend to appreciate this are people who have some experience and recognize all the problems solved that they had. Like, oh man, I was always confused about the trailing stop. I was confused about this, and that. I never knew how to gauge my profit objective or my risk relative to the time frame. And then they appreciate something like this. But I get these beginners, they sign up, right? You get these, you know, these people that have all these warped expectations and they think they're buying the magic button. Nowhere do I say this is the magic button, right? There's nothing magic about this. It's a confirmation tool. And they cancel like after 1 hour of using it. It's like, man, what were you expecting? Okay, look, profit objective. I am going to blow out too. Goodbye. Blew them out at 63,378. All right. We don't have to touch it exactly. That's close enough. I still have one on. Okay. I still have one on. You can see here. Now, the idea behind, look, we're going through the profit objective. All right. I should have waited a few more seconds, right? Would have made a little more money. All right, whatever. It's on paper. Doesn't matter. Look at the trailing stop. So each minute, as each minute now closes, this trailing stop is going to begin to follow the trade. Okay, see, it popped up a bit. It's going to follow the trade. If price decides to gyrate around up here and fool around for a while, the trailing stop will continue to follow. And eventually, it will close up the risk gap and make it a risk-free trade. That's ideal. That's how you capture a 5-to-1 move. I mean, I haven't seen moves that big in a little while. But when the market returns back to normal and we're getting like big volume again, or normal volume, I should say, I mean, I've seen moves where this thing runs like 8-to-1, like it's nuts. That's ideal, but that's not common. I don't want you to think that that's common. But the trailing stop makes that possible. It opens the door of possibility. Whereas before, you're reacting to candles and you're much less likely to capture such a large move. Now, your goal shouldn't always be to capture runners. A runner is more likely to happen off of a major level, right? A level that's significant. That's where a runner is likely to happen. Because, I mean, look at all this potential. You could see it here. We talked about that, right? This thing can easily run 200 points off of this level or something like that, or further. We're not near any major resistances here on this time frame. When I say major, I'm referring to the hourly time frame. And the price action that we're seeing on the 1 minute is in line with our anticipated move. And I had to use counter trend to get into that. Notice this trend is still bearish, but we have conflict, right? Trend is bearish, but this thing's going higher because of the location. We measured the probability of the location, and that's what worked out. We got stopped out on the first one, but as you can see, I said we're not going to reverse and go short here. This is not a location to go short. Do you see how the context came together for us there? It doesn't always work out this way, but this is a nice situation during a really, really tough time to trade. Close of the stock market at the slowest week of the year. and we get like a decent little move here. You can see the trailing stop here now starting to take over. See that? Our risk gap is almost cut in half. See that? Can this thing turn right around and go to the trailing stop? It can. Some stupid news can come out in the next 5 minutes that we weren't expecting, and it can go straight there. It can happen. All right, you guys cool? All right. I've been at this now an hour 30. I'm going to be wrapping this up. I'm glad I was able to show you something that almost got stopped out, but we gave it a chance because we gave the orders a chance. I wasn't making any judgments based on the price action or the candles, and we got our profit objective. And it's a little bit beyond it. And our trailing stop is acting nicely here. Cut our risk in half. All right, so I'm going to close this thing. Now, theoretically, before I close this, the right thing to do here would be to just let it ride. We closed 2 for a profit. We have our third one. Let it ride. Let it ride, as Seinfeld would say, right? Let the market pay you. Sure, I'm risking that we're going to give back the profit. That's a risk that I'm taking. But you have to take risk to make more money. Okay, if the market wants to pay, let it pay. Look at our location. This is not a bad location for a long. And there's plenty of room. This thing can easily run up more. So you have to make that decision. The trade scanner can't make that decision for you. You have to decide, do I want to let it ride? Do I want to take my profit? Since I locked in profit, it doesn't hurt to let it ride. Now, if you consider the time of day and you also consider the time of the year, you may be like, you know what? I don't like this environment. I'm going to take the profit. That's perfectly fine. There's really no right answer for that. It's going to depend on your risk tolerance. And if you want to just, go for it, that's being more aggressive. Like I said before, this is not really the environment for being aggressive, but it's up to you. Okay. So like in this case, since I locked in something, I'd be like, all right, so if I give it back, I give it back. And now it's up to the market. It's not up to you. Do you see like that? That's a big change in mindset where, if you're reacting to every little thing. If I was reacting to all these pullbacks, I would have been out a long time ago. Okay. But I'm not making any decisions. It's up to the market. And now I can relax and I can decide, okay, do I want to hold it? My risk keeps getting tighter and tighter. I'm almost at a risk-free trade. See? Oh, look at that. Good thing I wasn't reacting. Okay? So now when you see that, look, oh, you want to pay me more? Let it ride. Just let it ride. Okay? Nothing to do. This is the situation you want to be in. All right? Any questions? All right, so I'm going to close this anyway, but like I said, I would try to let it ride and let the trailing stop conclude the trade. The trailing stop will eventually follow this thing all the way up until this thing turns around and touches the trailing stop. That may be 300 points higher. I don't know. One nice thing about the Trade Scanner Pro is it incorporates the idea that the market is random. Okay, the market is mostly random, especially on these time frames. We're playing with random price action most of the time. The Trade Scanner Pro embraces that idea. And it doesn't fool you into thinking, well, it knows the future. No. But it's open to the random nature. Okay, cool, Sean. All right. So again, there we go. Right? This is pretty much break even. I'm just going to get out because I just keep talking and talking and talking, and I never stop talking. So I'm just going to get out. All right. Nice trade. Also, notice I'm getting the warning now, right? Let me explain this real quick. So the trend changed to bullish way before. We were in it way before that, right? Remember I said we could wait till this turns bullish and then look for a continuation? Well, we got in at the bottom. Okay, cool. Now it's bullish. Now you see here I'm getting a red warning. It's because we're still in counter trend mode. And it's possible that we can get a counter trend trade, right? Because we're in counter trend mode. Counter trend mode now means we're looking for shorts. But we don't want to look for shorts here. So I will turn counter trend mode off. Why would we want to look for shorts? Now look at this. It called a short. Obviously, there's a short trade that it called because the trend over here was still bearish at the time. So look, I'm going to ignore this. I'm not in that trade. There's no reason to take that trade. It's against the trade. And why would I want to be short near a support level? Context. You need to be aware of the context. So don't be confused. You can get confused by this if you don't understand context. And that's why I do these streams, in hopes of teaching you these things, so that when you're in these situations, you know how to navigate around it. All right. Okay, you guys. So again, you know where to find me. Real quick, so you know, check the link in the description, press the like button, press the subscribe button, and all that stuff. Try the Trade Scanner Pro out. You will like it, especially if you have some experience. I think you will find the value in it. Also, we're very open to feedback. Savi over here has sent us a number of feedback points that Steen incorporated into the script like right away. You don't find that anywhere. So something to keep in mind. And also, if you reach out to us in Discord, you know, or by email or whatever, you can do that. Mark@markpmarcus is my email address. You could send me a message here on TradingView. Please keep in mind, be aware that there are scammers out there. And if one of us reach out to you first, either me or Steen or Alex, and you get a message from us and we're asking you for money and we're giving you a link to a weird website, that's not us. There are scammers out there. They try to take advantage of our good reputation. Please be aware. We don't do that. If you get such a message, block that person, report that person. We have a channel in a Discord where you can report the scam to us so other people know. Please don't get fooled, because we don't do that. Okay. I showed you the website where you can subscribe to the Trade Scanner Pro. That's the only website you should be going to. Okay. I have a training website, but I'm not pushing. I need to update that. So that's markpremarkets.com. Those are the only two sites. You should not be going to any other site, and no one will ask you for money. Okay, you guys? All right, cool. So thanks for your time today. I hope you got something out of this. Like I said, you know where to find me. I hope to see you sign up for the Trade Scanner Pro. You have 14 days, and you can cancel anytime. It's very easy to do. All I'll say is what I showed you. Look at this thing going nuts now. All I will say is start with the 15-minute time frame. You can start with a 4-hour. You could start with a 1 hour to get your bigger picture, like I've done here. But notice we played the support level, okay? And that's the type of reaction we should see off of a support level in a generally bullish structure, right? So context came together. We had the level in advance. We got the confirmation. We respected the orders. It's very simple. Again, thank you for watching. All I will say is start with a 15-minute chart and use a larger time frame for your context, like a 4-hour. You could use a daily or 4-hour, and use your 15-minute. Use the notifications from TradingView so that you don't have to sit in front of your chart. If you want to be nuts or you want to do it on paper, then you can try to do what I demonstrated here on a 1-minute or a smaller time frame. Okay, if you have access to that. All right, everyone. Again, thank you. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you for watching.